There hasn't been a new asset class since the bond market was created in 1693. Well, now there's a new asset class, and it is the digital asset space. The question is, are you participating? Hey, what's going on, guys? It's the Crypto Siege with another day in the life, in the crazy life that is the digital asset space. Good morning. Happy Tuesday to you. Guys, listen, two really good articles I'd like to share with you guys this morning. I think we are in very interesting times. It feels as though this is a deliberate attempt to kind of sink the economy so that they can do a reset, and they will blame it on the beer cold. It's a very, very interesting thing. But Ripple, I believe, has an answer to one of the bigger problems going on right now, and that is illiquidity. And I think on-demand liquidity is going to start to become a catchphrase, a buzzword, if you will, throughout the media. When you start hearing, when they'll get the word from old money, hey, start talking about that on-demand liquidity thing. I think it's going to happen. I really, really do. So let me cover the Forbes article first, and then I'll cover the answer. So here's the challenge. Donald Trump, and by the way, this is your XRP Ripple daily news in 0 to 10 minutes. Donald Trump and the Fed could be about to destroy the U.S. banking system. This is from Forbes and Billy Bambro. Okay, Donald Trump and the Federal Reserve have gone to extraordinary lengths to prop up the United States economy in recent weeks. The beer cold pandemic and the lockdowns put in place to slow its spread have ravaged the U.S. economy, with the Fed and the Trump administration pumping a staggering, I think it's more than $6 trillion now, $6 trillion into the system since March. Wow. Since March, and taking interest rates back to record lows to keep it on its feet. In the record lows, it looks as though it's going to go actually negative. Now, as the economic reality of a post-beer cold world sinks in, President Trump and the Fed are edging closer to negative interest rate. Well, there you go. Something legendary investor Warren Buffett has warned could have extreme consequences. Negative interest rates, meaning borrowers are paid to take out loans by the lender, have been adopted by a number of central banks around the world, led by some European central banks and the Bank of Japan. If a central bank sets its overnight deposit rate to below zero, lenders must pay their central banks to hold their reserves. Isn't that interesting? Banks could then pass those costs on to their customers, charging fees for positive balances. I got to tell you, I hope you're starting to get familiar and learn more about cash flow banking. I hope you're starting to look into the infinite banking concept, guys. I hope that you're looking into that. If you have some questions, reach out to me on Twitter. It's crypto_siege, CEEJ. Some economists believe negative interest rates can jolt life into flatlining economies. Encouraging money to be invested or spent, though others fear a negative interest rate policy could keep an economy subdued. That's what I think too. We're doing things that we don't know their ultimate outcome, Buffett said, when asked about the possibility of negative interest rates in the United States at Berkshire Hathaway's annual meeting on Saturday. Negative interest rates are probably the most interesting question that I've seen in economics, Buffett said, speaking to shareholders via webcast and warning of extreme consequences if a negative interest rate policy is brought in. Extreme consequences. Wow. Yep. Back in March, Buffett said the puzzle of what negative interest rates would do to the U.S. financial markets is the most important question in the world, admitting he doesn't know the answer. Earlier this year, Trump indicated he'd be in favor of the Fed adopting negative interest rates in order to compete with countries that already have, right? So this article was dated March 2nd or 3rd. Interesting. We're forced to compete with nations that are getting negative interest rates, something very new, Trump told attendees at the World Economic Forum in January, meaning they get paid to borrow money, something I could get used to very quickly. While Fed Chair Jerome Powell has said he doesn't think negative interest rates are an appropriate policy, I remember both those statements. I remember the Donald saying that and Powell and replying, right? Trump isn't shy about applying pressure. Yeah. I remember when they were really going back and forth with, Trump was really on Powell. You remember that? The Federal Reserve should get our interest rates down to 0 or less, Trump tweeted in September. It is only the naivete of Jay Powell and the Federal Reserve that doesn't allow us to do what other countries are already doing, Trump said, calling the Fed policymakers boneheads. Naivete. Meanwhile, Narayana, holy cow, cannot say that, Kocher Lakota, a former president of the Federal Reserve of Minneapolis, has thrown his weight, that's a dude, has thrown his weight behind negative interest rates, calling the Fed to set interest rates at a 1/4 percentage point below 0 and put employment above bank stability. Put crudely, the Fed is giving up on unemployment reductions to help keep banks and their shareholders safer, Kocher Lakota wrote in a Bloomberg op-ed. Wow. The Fed opted to keep interest rates on hold at its latest policy meeting last week, though Powell said he is willing to go further to prop up the economy ravaged by lockdowns. It may well be the case that the economy needs more support, Powell said, speaking at a press conference after the Fed's 2-day policy meeting, leaving negative interest rates on the table, but keeping them at arm's length for now. One of the things the Fed wants to do is protect the banking system. William Lee, chief economist, well, isn't the Fed made up of the banks? Don't they own the Fed? So William Lee, chief economist at the California-based economic think tank Milken Institute, told CNBC this weekend. Yeah, it makes sense that that's what he's trying to do. We've learned our lesson from Japan and the Europeans. When you go into negative interest rates, you start impairing the banking system. I think negative interest rates will be the last tool the Fed pulls out of its toolkit. The Fed right now is oriented toward ensuring financial markets work and work properly and stay working. The Fed right now is oriented toward ensuring financial markets work and work properly and stay working. So that is really the challenge right now, I think. It looks as though this is where they're going. They're going to the president, Donald himself, is going to get what he's looking for. It really, really feels that way. Let me go over what could be part of the solution, and I think a major part of the solution. This is from Crypto News Flash, and it's the contributing author is Jake Simmons. It says Ripple, and I'm going to change the phrase a little bit. Ripple XRP acts XRP as a bridge between digital bank currencies. I'm going to say XRP as the bridge between digital central bank currencies. According to Ripple's head of global banking, the XRP token could act as a bridge between digital central bank currencies, which themselves lack interoperability. She also predicted, and these are his highlights, she also predicted in a panel discussion with representatives from banks and Microsoft that the trend toward digital currencies will be accelerated by the beer cold pandemic. Remember, Ripple can, the XRP digital asset acts as a bridge. It can put into effect the velocity of money. It can free up liquidity. It is a powerful tool because it's not just cheap and expensive and efficient. It is also very, very fast. When you add those together, it's a multiplier, a catalyst that is beyond. And this is what the system needs. It needs not just to cut the cost. It also needs to put the velocity of money into place, which will cause a massive economic effect in the positive. Margine Delatine, it might be Marjan Delatine, but I think it's Marjan Delatine, head of global banking at Ripple, spoke about the digitalization of a banking in a panel discussion with representatives from KPMG, Starling Bank, Microsoft, and our friends HSBC. Delatine, who is responsible for communicating with banks at Ripple and ensuring that banks understand Ripple's technology and the blockchain in general, that's an interesting way they spell blockchain, explained that some of the world's largest banks are preparing to own and trade digital assets. The world's largest banks are preparing to own and trade digital assets. This is a lady who meets with the world's banks around the world. Delatine explained that the banking system with its current infrastructure, keyword, is way too slow and inefficient. Yeah. Inefficient in processing cross-border payments. In her experience, banks are beginning to see the value of the blockchain technology. Ripple and its technologies can, as many Ripple customers have already realized, on the one hand, reduce operating costs, and on the other hand, accelerate scaling. Our contribution, this is a quote from Ms. Delatine, our contribution to this digital era is building an infrastructure. You see that word again coming up? Remember when Brad Garlinghouse, one day, early in the morning, this dude woke up, got dressed. You know how he likes to get dapperly attired. Got dressed, had some breakfast, and headed on out to CNBC. And had a chat with Miss Julia Chatterley. And out of nowhere, in the midst of this conversation, this dude said that Ripple, and I'm paraphrasing this part, the no longer, but this dude said, essentially, Ripple is no longer a fintech company selling software to banks. That's my part. What he said was, Ripple is a blockchain infrastructure company. And I thought to myself when I heard that, when did that happen? When did they switch from a fintech company, a massive fintech company, selling software to banks? When did they switch from that to a blockchain infrastructure company? Probably when they realized that was going to be the new thing. The software sales part is pretty much a done deal. It's pretty much, Ripple's not making calls and knocking on doors. No. Ripple is taking calls and answering the door. Isn't that interesting? All right, so our contribution to this digital era is building an infrastructure that helps financial institutions get closer to this reality of instant and convenient payments. When you look at the aging infrastructure that is in place today, in order to transfer money around the world, this is very close to a fossil system. There is a trust established between members of these systems but you still have a lot of inefficiencies in terms of the cost. Our customer base realizes and recognizes inefficiencies, and they look at the blockchain as a technology that can inherently diminish the operational costs and speed up the scale up to bring new services in competition with established organization. Like Naveen Gupta, Ripple's managing director for Southeast Asia, she stressed that the beer cold pandemic will accelerate the transition to a digital society. The pandemic has significantly reduced the use of cash, Delatine said. There are different layers, and the real consequence of the beer cold is the fact that the use of cash is declining because of health issues. If this trend continues and you need to somehow ship money somewhere, you're going to see banks are going to have more pressure on them to get to the more digital world. And it's pushing banks toward this digital world. She also talked about the ongoing global trend for central banks to examine and test CBDCs, central bank digital currency. There you go. She explained that some countries are more advanced than others, citing France and the test of the digital euro as a prime example. At the same time, she stressed that there needs to be a bridge between the different digital central bank currencies, as they themselves lack interoperability. According to Delatine, Ripple's XRP token is predestined for this. Well, how about that? How this will work in terms of interoperability between each of them and the more international worlds, that's probably going to be the digital currencies like XRP, which can play a role in terms of playing a bridge between multiple or different CBDCs. I think these trends will continue and be reinforced in the coming years. Absolutely. That is the question, guys. Listen, the champ is here. The champ is here, and it is, in fact, XRP. And so, yeah. And so now, again, I will say this again, and I had to add a word to this, but I'll say it again. The ILP, the XRPL, the ODL, Codius, and XRP. Just pick one. All right, guys, listen, I'm going to wrap up this video like I do all of my videos and remind you of this. Old money doesn't want you to win. They don't want us to win. They would rather us remain a cog in their perpetual wheel of trading time for dollars. They don't want us to play in the same playground that they play in, where we allow our money to work for us. This is our chance to win, guys. The digital asset space is our chance to win. We are in the midst of the greatest transfer of wealth in the history of man. Are you participating? Or are you standing on the sidelines? Here's what I do know, that the battle for you has already been fought, and the victory is yours. Go get it. I'll talk to you soon, guys. See ya. Bye.